Welcome to the Market Mindset. We are the hub for news, results, and CEO interviews focusing the junior commodities sector. We provide market analysis and perspective that will help position you for solid returns. If that sounds like something you're interested in, you can help support us by liking this video, subscribing to our channel, and clicking the notification bell. For more info, you can visit our website. All links are in the description below. Now let's get into today's video.
Good morning, everyone. It's Andrew with the Market Mindset. Real pleasure today to catch up with Brian Ostroff, who's the president over at Arianne Phosphate, and also guest and new member of the board, Mr. Michael Gentile, who is very well known and respected in this space. He's a strategic investor, advisor, consultant, financier in this space, very well known. Has about 15 different, significant positions in mining companies, and I won't go into each one, but also recently formed Bastion Asset Management. It's a real coup to have Michael on board with Arianne, and I want to kind of phrase that because we'll get into that discussion. But we also want to catch up with Brian to talk about the fertilizer market. Obviously, we're in a big overall market theme pullback, but to see, has anything changed in the fertilizer space? Has anyone missed anything? Is there fundamental news of that's negative for fertilizer or for Arianne? And then catch up with some of the results that they've had. They've had a lot of news lately, and we're really pleased to have both of you on. Welcome to the show and happy Friday.
Thanks for having me.
Thanks, Andrew.
So let's start and just kind of talk about the news from the results that you've had back. That's the latest news release. I think you've always said that think of phosphate as food first, but this is a nice carrot to have as well.
Yeah, always been the thesis here. In the past we have talked both from the food front and maybe some of the alternative uses front. And so, to your point, earlier this week, we put out some pretty exciting news with regards to our phosphate and the LFP. So, your viewers that might have been watching or understanding the LFP, the lithium iron phosphate battery, has been proliferating through the automotive market. With many companies using it for their standard range vehicles, Tesla, Volkswagen, many others indicating that they will, Rivian, Ford, GM. But one thing that maybe people don't understand is that is as exciting as the potential for the LFP in the car market is, LFP just for overall and energy storage. Many consultants, Benchmark, Wood Mackenzie, actually see demand for the LFP exceeding that than the demand for the LFP in the car. And so, the bottom line is, as an overall macro, and we've talked about this several times, demand for phosphate always grows. It grows at about 1.5% to 2%. But that was before the LFP. And, with the LFP, and you take a look at some of the projections out there, it looks like that annual demand is going to double. So, in other words, looking for growth not of 2% a year, but maybe 4%. And as your viewers, I'm sure, understand, 4% on 4% on 4% winds up being a lot larger than 2% on 2% on 2%. And so you've got all of this coming at a time when, because of geopolitical events, etc., supply is getting harder to find. So whether it's for food or this stuff, I think that demand for phosphate is going to continue to grow. So that's the macro, and I guess in a little bit we can go into the micro, but Arianne, I think, is in a pretty sweet spot.
And that kind of leads into my next question, which is for Michael. I know the process for you to be interested, excited, involved, and at different levels, if you're going to invest, if you're going to advise or whatnot, is significant. And I want people to understand that there's a process. It's a long process. It's an arduous process. You put a lot of work into whether or not you want to work with a company. And I know from watching interviews with you specifically, and it's important, is that your view, and you can tell me if I'm wrong, is that you're looking for companies that can become a mine. And that is a lot different than a speculative, hey, I think they might find something, it's looking good, I'm going to play the speculation game. And that model requires a lot more work. And I kind of wanted to frame it that way so that a lot of people who are watching, who are generalists, and they'll want to know what attracted you to this, and what, maybe not in detail all the steps, but what it takes for you to get excited about a project, and then why fertilizer.
Mm-hmm. Yeah, great lead in, Andrew. I'd say for sure, I am very concentrated and very focused in my investments. So similar to Brian, I have a 20-year plus background in institutional money management, and that process is very rigorous. When you're running billions of dollars, and you're writing $20-30 million checks for investments, you do a very deep level of due diligence on any investment you write. So a few years ago, I had twin daughters, took some time off to spend time with the family, and started investing in these smaller micro cap stocks that typically don't have that level of diligence and review. Most investors will buy because their buddy told them to buy a tennis club, or they saw a video on YouTube, or it's on the front page of the newspaper that phosphate is hot or gold is hot, and so they're just speculating with their speculative investments in general. So what I tried to do with my new thrust is really do institutional level due diligence on companies. Look at hundreds, not thousands, of junior exploration companies, and pick the 15 to 20 that I think have the attributes to potentially come a mine. And what I did for 20 years was I invested in companies that were mines, single asset producers, two asset producers. So kind of reverse engineering and going backwards, saying, well, what made those mines successful? What made them mines when hundreds of others failed? And try to identify those attributes as early as possible in the life cycle and hopefully the market cap cycle of companies that have the chance to become a mine. Now, I'm very transparent with my investors that follow me that, even at my 20 investments, if I get 4 or 5 that become mines, I'll be very lucky. I mean, the failure rate is very, very high in junior exploration, but those that become mines will become 20, 30, 40 times your money type investments. And that's what I'm looking for. Almost like a VC model where you have exponential returns. You invest at the right time in the cycle, at the right entry point, with the right level of due diligence. And I like investing in inefficient markets. And so if as an institutional investor, I invested in the small mid-cap space, which is the most inefficient space for the institutional money management business, because most institutional investors who are very savvy, can't go in the small mid-cap space. When I got out of the small mid-cap institutional space, let me go to the most inefficient market I can find, which is the wild west of junior exploration. And there you have extreme mispricings, both on the upside and the downside. So I found it very fertile ground for finding new investments, high quality investments. And I layer on a second attribute, which I love in the commodity space, having covered commodities for 20 plus years, is you want to invest when sentiment is at really negative levels, which hard to find more negative sentiment than we had the last 2-3 weeks in the market and commodity stocks. But where you have a differentiated view that the macro is going to turn, or the macro is becoming more and more positive. So that's where, all the stars kind of align for me on Arianne. I have a very positive view in the macro. I mean, Brian talks very well about the food demand is real. Security of supply for food is real. Ag prices are through the roof. It's hard not to be constructive on phosphate price for the next several years when you talk about supply demand. So that was positive. When I dug deeper with Brian and the team into Arianne, the LFP news we put out this week is very significant, because in any commodity, like Brian said earlier, when you have 2% demand growth and a new demand driver takes it to 3 or 4%, that does exponential things for the price, because typically supply takes a long time to respond. So when you have incremental new demand, that's what drives the price typically much, much higher. If you remember in the 90s, when the Asian tiger economies in China started eating up all the oil, you had oil demand was here. All of a sudden it went up because of China, and the price of oil went from $10 to $140 a barrel. I'm not saying the same thing's going to happen in phosphate, but the same type of dynamics are going to happen where new sources of demand drive supply up. You've got to eat. That demand will stay constant. New demand on top of that should drive prices even higher. And you layer in a market and a stock at Arianne, which is trading at very depressed, low value. The sector is depressed. The valuation for Arianne is even more depressed than that. That's a recipe for exponential returns, in my opinion, historically in the sector.
And I love that asymmetric kind of gain and the excitement of that, and having someone who can, engineer, like you said, look from one side of the market. Say, I'm not saying you've ever bought Nutrien, but if you look at a Nutrien and go, oh, if I'm a generalist advisor, investor, and I look at Nutrien and go, well, it's pulled back 30% from its high in April and May. It's a big company. It's got cash revenues. I can kind of analyze that, and maybe I can make a gain in that. Okay, sure. But are you going to make the asymmetric gain of a 10 or a 20 or a 30? That you would know the de-risking steps and the probability. There's no certainty, but the probability of, can we meet that? Can we meet this? Can we meet this? And bringing someone on board like yourself would give people, some reassurance that here's someone who's done it before. They understand the process. They understand what it takes. You come from with a big, strong financial background that can be utilized and leveraged as well. It would certainly, in frothier times, would certainly make the stock jump a lot more. But it certainly bodes well for the company itself right now. Like, if someone's looking to visualize their portfolio moving forward, and they start really seeing the supply chain, there's food issues, there's energy issues, there's lots of key issues which I think a lot of people took for granted that we had it all sorted out. There's certainly a way to kind of to maybe take back some of the losses that have happened if you're a generalist in an ETF or a fund or whatnot.
I couldn't be more. Go ahead, Ryan.
Yeah, no, I was going to say, look, markets go up, markets go down. I think that the long-term secular trend is still very much in place. Look, what got us to where we are today? Well, again, demand for phosphate grows every single year. Population is growing. People want to eat. It doesn't matter what the S&P is doing. It doesn't matter what the economy is doing. That demand is there. But as we've talked about several times on your show, it's also understanding where that supply is. Mm-hmm. And so, look, when it comes to the phosphate concentrate, that ingredient that goes into the fertilizer or even into the batteries, or the bulk of that comes from the Middle East and North Africa. And that is just not an area that historically shown itself to be a particularly stable place. And, I think making the situation potentially a lot more dangerous looking a few months ahead is what's gone on in Ukraine. So, Arab Spring happened the fall of 2010 through the spring and summer of 2011. And what drove Arab Spring was food prices, grain prices. Your viewers can go and pull out a long-term chart on corn or wheat and see what happened then. And we've got the same situation now with Ukraine, only arguably it's worse because, countries like Egypt, for example, which is a phosphate producer, 80% of their wheat comes from Ukraine and Western Europe. Western Russia. And so what's going to happen? What's going to happen this fall when that doesn't show up? And so, I've said this a few times, and yes, and the market is pulled back and what have you. I think intellectually people might understand it, but there's a big, big difference between being intellectually hungry and being physically hungry. And so we are heading for physical hunger. So the supply demand, arguably, for all the wrong reasons, of course, but arguably is better today. And if the stocks are down 30% in an environment that's even better today, I think you're really in a good place.
Good point, Brian. I just want to say something, Andrew. Like, if you look at the market, what's done, and everyone's probably concerned about their portfolios, seeing their stocks go down. What gives me a lot of comfort in the names that I own is you look at the macro for two of my big themes, gold and phosphate and commodities. Is the macro picture for phosphate and gold has actually improved over the last 3 to 4 months, right? Gold, you were seeing recessionary fears, slowdown started to come into the market. Maybe the Fed's gone too far. That's turbocharged fuel for gold. But the gold junior stocks have all gotten annihilated, like gold's going to $1,000 now. So gold stocks are going down while the macro is getting better. Most stocks in the market, like if you're a tech stock or you're an economically sensitive stock, the macro's gotten worse. So your 30 to 50% mark or 70% mark you took on your stock may very well be justified. And you may have to take a long time for those stocks to bounce back, other than just trading bounces in the market. But fundamentally, the backdrop for Arianne is as strong or stronger than it was 3 months ago, yet the stocks pulled back 20, 30%. The backdrop for gold names are stronger than they were 3 months ago, yet the stocks are all down 30 to 50%. So me as an investor gets me very excited. That's why I've been writing a lot of checks the last 3-4 months. I like to write checks when there's blood in the streets, when there's fear, when there's anxiety, because my macro thesis hasn't changed at all. The other sectors, you got to check your macro thesis, because macro probably has gotten worse in a lot of names. So I think Brian and I are frustrated with the stock is, but we're sleeping pretty well at night, knowing that the macro tailwinds behind us are blowing just as strong or stronger than they were 3 months ago. And so as investors, you can take advantage of the fact that we're traded stocks that go down when everything goes down, but you can pick up these stocks at incredible values right now in the market.
Yeah, I mean, I can liken that to just, I mean, the easiest one is say, and not to pick on Apple, but people, when you've got high inflation, they're concerned about their finances at the door. There's a downturn on lots of different markets right now. Is they're less likely to go buy the brand new Apple phone this year, but they're not going to not eat. They're going to have to find money to get on, even if it's get on the bus, which that's going to cost more. Certainly Vancouver, they've upped the prices to get on a bus. But if you're driving, it's gas. So all these things that, once again, we've taken for granted that we can't choose not to do are I would argue one of the best inflationary plays that one could do. If you are worried about the cost of Safeway, meat and your veggies going up, well, you should probably buy a fertilizer company or someone that produces the ingredients that makes food, and then you could fight inflation that way.
It's a great point. If you look at Target and Walmart's results, they had tough quarters. And if you look at what happened to their business, the percentage of people's basket going towards food went dramatically higher. And the gross margin on food is like 2-3%. It's kind of a loss leader for those guys. And the percentage on discretionary items, the t-shirts, the TVs, the stuff where they have good margins on, went down. Exactly what you said, Andrew. The allocation, you have to eat. So if your food costs go up 50%, well, that's less money to spend on other discretionary items, but you've got to eat. And so with prices going up, the incentive to plant more crops and more, have higher yields is going to be much, much higher, which drives demand for phosphate. Not so good for the discretionary parts of the economy, which are going to be seeing less spending due to wallet share losses to fuel and food, which are truly non-discretionary. You got to get to work and you got to eat. So that's your first spend. Whatever's left over, then you can spend on extras. And so that's why the demand for phosphate should be quite robust, if not increasing in this environment.
Yeah, I'm certainly hoping we see more news on that. We're seeing a lot more news about food. I mean, The Economist, the World Bank is out there. IMF talks about, hunger in the world, that it's out there. It's just not maybe getting MSM kind of treatment, but I think that could be coming. And once that kind of education piece where people are kind of motivated, like, yeah, maybe I should look at this. That's hopefully we'll get out there to show people that. And my kind of thesis is the best way to solve problems is an open and fair market. And if you let people work hard towards a goal like that, that's the best way you could do it. And if you want to be an activist to try to help world hunger, the best thing you could do is invest in fertilizer companies and companies that are solving that issue rather than just bringing awareness. And that's why I try to get people, like, if you're really an activist, you really want to get involved in whether it's a green initiative and you like copper or whether it's whatever, lithium, then the best way is to go use your money and leverage it. And there's no harm in making money in that process too. That's the wonderful thing about the whole thing, because not only do you solve an issue, is that in 10 years from now, you could be sitting there saying, listen, I was part of a solution. And that's why I like to kind of paint that picture for someone. Go, imagine in 10 years, if you've helped solve a solution, or you've helped solve something with a battery side, or you've helped move the green initiative that you love ahead, whatever it happens to be. I try to get people to think right now there's some pain, but imagine the joy you'll feel if you've been part of that and you've invested in towards that.
Yeah, look, and just going back to your earlier comments, that was one of the things that I had always said with regards to ag or ferts. What makes them a beautiful investment is, first of all, they're generally not overall correlated with the market, with the S&P. And, in today's world where everyone's worried about inflation, well, what's inflating? Food. Energy, all right, decarbonization, and also there's just not a ton of ways to play it. So I think as more and more people understand the macro and want to be positioned for the macro, they don't have a lot of choices. We've talked about Nutrien or Mosaic or some of the large cap guys that are really going to kind of move with the industry. But look, there are people out there who don't look at the big caps, that are looking for that next development story, something that can, not benefit necessarily because the overall macro, I mean, Nutrien and Mosaic and what have you, they will benefit from higher fertilizer prices. But, I think that there are stories out there like Arianne that, obviously the macro is going to be really good, but the micro, like you have some very real events there, and you take a look, your torque on $100 million market cap versus 20, 30, $50 billion market cap companies. Well, there you go.
Yes, that there's a lot of wiggle room there, to say the least. And I guess that leads into, I had a lot of emails asking, and I mean, I'll have to phrase this in such a way because it's tough, because obviously they would want to know and wish to know, okay, where do you stand with offtake agreements? What are they? How does it look? Where are we at? What's the next step? A lot of questions like that are maybe, can be answered to some extent. So I'll just kind of put that out there as far as what someone should be looking for the next steps. And as far as offtakes, what you can and can't say, and where things kind of stand today, and what we should be looking forward, in the next couple months to 6 months.
Sure. So, we've kind of danced around a bit on the overall and the macro. Maybe this is a good opportunity to get a little bit into the micro and Arianne. So, first of all, this week we did put out that very positive news around the battery side of things. So just to remind your viewers, late last year, we had announced that we had been working with a couple of the battery companies and received specs and were basically asked to go show that we could meet spec, because that's another important thing. Like phosphate, unlike, for example, gold's the same. Your end product is the same. In the case of phosphate, depending on the mine it comes from, and the reality is not all phosphates can be used in these specialty applications. So, look, I think the general feeling, because of the nature of our deposit, was that this was going to work. But the reality is it doesn't work until it works. And so now we can very comfortably say it works. And so, what does that mean? That means that, to a consistent point, we are an answer for food, but now we are an answer for EVs or the LFPs, energy storage. And so to your viewers' question, his email, offtake's very important for us. I mean, the banks are very comfortable with our project. They want to see that we have customers. Unlike, say, again, gold, which trades on an exchange, to build a gold mine, you will have a customer because you can always sell it into the LME or the COMEX. But most commodities are contract markets, offtakes. And so the banks want to see this. So what that news does is it opens up more potential customers for us. So, obviously I can easily meet the demands of the traditional fertilizer market. We've also done some work around some of these very exciting alternative fertilizers, and maybe we can discuss that at another time. But now we have the battery guys. And, subsequent to our announcement late last year, I'd say the discussions that we're having with battery guys have expanded. And so, this news is very good to the company that gave us their specs, but I'd say that it's very good news in general and allows some of these other guys that we're speaking with to have comfort. So, for us, the race is on, get those offtakes. But the good news is our potential customer base, has expanded and has expanded. So.
And Andrew, I just add 2 seconds to that comment. I'd say, as a new investor, I know many of the investors in Arianne have probably been impatiently waiting for offtake. And it's funny, when I had multiple meetings with Brian, multiple hours of discussions before I made my investment, my advice with him was don't go too fast on the offtake, because what I like to see here is what you want in a commodity market is good macro tail. We talked about that earlier in the show. But what I really love to see, whether it be an M&A process or in an offtake, is tension. And real tension. So the fertilizer guys have known that Arianne's around for a long, long time. And I think that the macro was very negative for the last 8 years or so, and it's turned dramatically positive in the last kind of 12 to 24 months. So that's great. That's why I'm here. That's why I think the timing is excellent for this investment. But those guys sit around going, well, I can wait because, you know, the market's not that tight. I'll get my phosphate when I need it. I know Brian's number by heart. I'll call him when I need it. Yeah. If all of a sudden you got the classical fertilizer buyers who now are looking over their shoulder at the EV buyers going, maybe these guys swoop in and take the whole bloody thing and take for batteries because they don't want to mess around and have their production profiles the next 10 years at up to the right be stunted by lack of high quality, high purity phosphate. And then all of a sudden, if you have this other dimension of direct application of phosphate going into the story as well, you got a third potential buyer who's very serious to take the whole thing. So now all of a sudden, all these three buyers are looking at each other cross-eyed going, who's going to blink first? And so that's why I think the likelihood of Brian can get you an offtake deal probably tomorrow, but I want Brian to get the best offtake deal possible. And the likelihood of a premium offtake deal or a higher, lower cost of capital, higher return for Arianne shareholder deal is dramatically higher with this LFP news that we saw this week, because that creates real tension. So a lot of things that Brian's been doing behind the scenes, I don't think investors have been appreciating, because the stock market wants news. I want, offtake for X hundred millions of dollars. I want this, I want that. But this tension is building behind the scenes. And that's really, really positive for our shareholders, for the company. And it's probably, especially in the bear market, not being recognized by the market, but being recognized by people like myself and Brian, who are quite excited about what we're seeing.
Yeah,
I like that, because you think of, sorry.
Yeah, no, I was just going to add something, and Michael, to your point in the competitive tension. So, the phosphate concentrate market is roughly 200 million tons a year. And so, all of a sudden you're going to get more growth maybe because of the LFP and what have you, but demand was growing at roughly 4 million tons a year. So, now it's going to grow at 5, 6, 8 million tons a year. You might have some people that will sit there and say, oh, it's only another few million tons on a 200 million ton market. But Arianne is 3 million tons a year. So to Michael's point about competitive pressure, when something like this happens and this news works and it works in another industry, right? It's not like, okay, well, it's 200 million ton market, who cares? This is 3 million tons. And to that point, once that 3 million tons is spoken for, it's spoken for. It's not that this new industry has emerged and you got to find a home for 200 million tons. We're only 3 million tons.
And also, Arianne's one of the largest undeveloped projects in the world. So it's not like there's 30 other projects at 5, 10 million tons either waiting in the wings. We are the biggest undeveloped project in the world at this high purity grade. So there aren't like there's 10 others behind us, and we're fully permitted. We're in a tier 1 jurisdiction. So like once this 3 million tons is gone, there's not 6 or 7 others that the next in line buyer or need of offtake can go to and feel really comfortable. So that's also very positive. Look at supply and demand for commodities. Because of the bear market, most projects have been stalled for 8 years, and these get fully permitted, as you know, Andrew, takes 3 to 10 years if you're lucky, right? And so there isn't a whole plethora of projects waiting in the wings once that they get snapped up. So that tension is very real and a very positive catalyst for our stock in the background.
Yeah. It's good to put pressure on the big, like the nutrients and the big traditional people. But as you were mentioning, I mean, Elon Musk went in with Tesla to do a lithium deal direct with a mining company. Ford just went in with an MOU with Lake Resources, a lithium down in Argentina. This is happening. And I ask a lot of different companies, like, do you see that traditional model flexing and shifting a lot, where even to the extreme where in the future could be like literally an arm of Amazon or Google that literally invests in a product, a mine that it needs for whatever use, instead of it being a traditional fund or this or that, where the end users can bypass that supply chain and go, we need X amount a year to come out. We're willing to pay for it right now. And we're seeing a bit of it, and we're seeing it coming from different places, like with car makers going directly to lithium. What's your kind of take on that, kind of shift in the way people are viewing markets?
Yeah, well, I think that's a very good point. You look and, I think you can arguably make the case that these battery guys seem a little bit more concerned with their supply chain security of supply than the fertilizer guys. Like I said, the overall macro, it wouldn't have taken a lot to see what was potentially going to happen with the fertilizer and the Middle East and China and where it comes from, but no one really did much about it. What I do see in the EV space, the battery space, is a much more heightened concern. Organizations are out there safe, securing America's future energy, and all of these groups, and they're really doing their darndest to see that they can integrate their supply chains. Look, back late October, China exited the exporting of phosphate fertilizers, and there were a lot of questions as to why, but more and more people have come to the conclusion that it was because they want to dominate the LFP battery space. And that means repositioning their own phosphate supplies, maybe not making as much fertilizer, making enough so that they are fine domestically, but being able to address these batteries. And so I think that stressed out a lot of people, because at the end of the day, 10 years from now, if 90% of the cars are EV, or sorry, yes, 90% of the cars are electric, and 90% of those cars use LFP, and China supplies 90% of the LFP, well, it's not Volkswagen, Ford, or Tesla that are controlling the automotive market. It's the Chinese. And so, to your point, Andrew, yes, we're seeing a lot of deals where the battery guys or the automotive guys are going straight back to the mine. There haven't been much in the way of direct investment in the mines, but providing the offtakes.
I made the point too for investors. If Arianne was a lithium story, they probably have a $600-700 million market cap, right? And
yes,
the reason why these automotive companies are getting so aggressive on the offtake and LFP batteries, to Brian's point, no lithium, no battery. But the also is true is no phosphate, no battery. And
yes.
So the interesting thing is this EV angle has not at all been appreciated in our stock. And I've been encouraging any investors that I know that are owning lithium names today. If you own the lithium names, you've got to look at Arianne Phosphate, because it's the same trend. The same trend you're backing in LFP lithium batteries is the trend exists in phosphate. You look at the supply, demand, the availability of high purity, high quality phosphate. It's probably even tighter than the lithium market. It's just not as recognized. It's not, has got the same amount of coverage or investor, awareness. But if you're in that theme for lithium, you've got to absolutely be looking at Arianne Phosphate, because it's similar drivers, but at a 1/10 of the valuation, probably, if you look under the hood.
And I'll throw this in there because it's important, because you came into the stock too in the market. Like, you came into in the open market to buy into this stock, which tells a lot of your commitment and your interest, for sure.
I rarely do that. Open market purchase, I typically wait for financings, because typically, most companies are not well run like Arianne is, and they run out of money and they end up in trouble. And so, I typically wait for those distressed situations on stories that I like to get the right entry point on a financing. I tried to twist Brian's arm 4 ways to Friday to get me financing me, but he refused. So eventually I ceded the victory to him and was able to coordinate a block for me to get my position I wanted in the market. But yeah, you're right. I rarely enter the market, and it's a function of the market being depressed, me seeing the macro being real and powerful, and not knowing how long the stock would be at these levels for it. If it wasn't for this bear market vigilant the sell-off we've had here, I think the stock would be much, much higher. And so it's a short window. You don't know how long that window is going to last in terms of the opportunity.
And we always love talking to Brian, because the education we get is fantastic, and we get a lot of comments, and people appreciate it. But we're thrilled to be able to get you on here as like a third party, or even fourth view on this, to give a seasoned person like yourself your perspective, and such a long history in the market, coming from the fund side, institutional side, to also be reiterating these key themes. It's invaluable. And that's why I'm so grateful that you came on as well to share some of your thoughts on this, because this is a pivotal time, I think, in history, where there's a lot going on. It's chaotic. It's very stressful. But if people can really kind of stay disciplined and focused, and look at, kind of ignore a lot of the noise, but like target focus, there's real opportunity here. And there always is.
Couldn't agree more. There's big shifts happening on the macro basis. There's going to be winners and losers. Right now, the market's saying if you're a stock, you're a loser. Everything is down. So if you can separate the winners from the losers and make some real, smart bets at timely places like here we are in the market, there could be some big gains ahead for investors.
Excellent. Well, thank you so much, Michael. And Brian, we'll let you wrap it up. Maybe let us know some final thoughts.
Sure. Well, I mean, we are full speed ahead. Again, we are today the world's single largest, purest, safest, in a space that demand is there. And now maybe there's a little sex appeal to the story as well. This thing obviously stood on its own just as an agricultural play. But I think the battery side, look, I think Michael's right. In people's minds, what are battery materials? Lithium, cobalt, nickel, graphite. Phosphate is, it's out there. It's starting to make its way in. And, I think with that just drives another set of investor. And we've already talked about how that's another set of potential customers for Arianne. So I think the macro continues to improve. And I think Arianne's going to continue to hit on its milestones. And, together, I think Arianne's future is pretty bright.
Excellent. Well, thanks again, as always, Brian. We really appreciate it. And thank you for your time this morning as well, Michael. I know it's a very busy time. Have a great Friday. Enjoy your weekend. And once again, thank you so much.
Thank you. Take care, Andrew.